Hello traders, Day Trader Matt here with businesswithtrading.com doing an Emini trading recap for the 13th of November, Thursday, and today was a pretty good day. We see that the market's pretty much opened up in line here, moved higher, and then eventually started moving lower into that 12 o'clock time period. Pretty much all of our trades were over before this point. So, hour into the markets, this is what we did. It was a very, very good day. We ended up making 7 trades. All of them were successful. And we pulled 21.5 points out of the market. It's hard to complain about anything like that. So it was a very, very good day. And our first handful of trades happened very quick. Our first trade was a long, pretty much right after the market opened. We kind of watched things a little bit. I was looking for it to come a little bit lower, and it did come a little lower. Not as much as what I thought it was going to, but it is what it is. We were able to get a very nice long, and we were able to hold it up. We ended up shorting up here, taking some profit, shorting again up here, and as we took profit the second time, we ended up rolling it into a long, and we actually were able to make some money on that as well. So it was very, very good. And starting the day out like that definitely allows you to be a little more aggressive when you're making your trades. Being able to make this and then make this on the short side, make it again on the short side. You're able to, take a little bit of a chance. Let's go ahead and get long here. If you get stopped out, it is what it is. You still are, up quite a bit. If not, you're just going to make more money. So it allows you to do that. And that's, one of the things I do look for. There's a difference between risking too much and a calculated risk. I do see traders, some of them new, some of them novice, but still struggling, and they may be up a little bit and then they start taking bigger risks, but they're taking risks that aren't calculated. They're just taking bigger risks, like a trade where you normally would say hypothetically would take a 2-point stop. They're taking 4-point stops. Same trade, same setup, same everything. They're just taking wider stops just because they can. That I really don't like. But saying, this looks like a really good trade. I have a cushion on the day. I want to take it. It's a little bit more aggressive than, say, I would normally do. But I have a big cushion. I have a very tight stop. I'm going to take it. See, there's a big difference between those two scenarios. So I wanted to highlight that a little bit. After we got out of this trade here, the market chopped around a little bit. As it came down, we took a short up here. Actually, we took a short up here, and we were able to take profits on the move down, and then we actually took a long. We exited up in here, and then we got long again as the market moved down again. From there, we were actually able to take some nice profits up here, and then obviously the market did move a little bit higher. That's one thing I do talk about a lot, and I go over it a lot with students and coaching clients. You don't have to top tick and bottom tick the market to make money. You just need to be able to jump in, make some money, and jump out. And that's what I teach with my trading course. Is you don't have to be in the market at every single trade. You don't have to be in this market every single swing. Today is one of those rare examples when we were pretty much in the market on the majority of the swings up until this point. So prior to 10:20, we were in the market for the majority of the swings. That's rare for the trading room. The majority of the time, we're in a couple trades, and it is what it is. On a day like today, it's a good example of, when the market's working, it's trading the way that I'm thinking, and we're in sync together. You can make more trades. Usually when I make over 5 trades, it's a successful day. You can look at that, and there's a pattern there. If you look at all the prior videos, that when I'm in sync with the market and the trades are working out, I can make more of them. But if I'm not in sync with the market, I always limit my trades. And most of the time, even when I am in sync with the market, I still limit my trades. There's a big reason for that. I go over that a lot when I coach students and in the trading course, because it is very, very important. So anyway, hopefully you got something out of what I was talking about today. It resonated with you a little bit, because it is a very important topic. And I even stopped halfway through talking about the trades to talk about a little bit. Just I find it an important topic, and it's something that obviously took me a little while to get, which is why I talk about it. When I first started out in trading, I was the guy who was in every single move. I tried to top tick and bottom tick, and I know why I was doing that now. At the time, I was like, this is insane. I make 200 trades and break even. Like, what's the problem here? Instead of looking at myself, I was looking outwardly. And that's another topic for another day. But that's why a lot of people, a lot of traders out there just change styles over and over again, because when the market changes, their style doesn't work as well as it did maybe the day before or the week before, or the way somebody told them it would. But anyway, that's for another day. You can always leave comments below the video. Thanks for watching. Have an awesome rest of your day, and I'll see you back here in the markets. Thank you.